What is an escrow account and why do I get a check back sometimes because my escrow account is over? Or worse, why does my monthly payment go up because my escrow account had a shortage? Hi, this is Recharging with Champions. I'm your host, Charlotte Harrill. And this is something that we get asked pretty regularly. On the upfront, if you've got a first-time home buyer or you've got somebody that used a company that did not have mortgage escrows, they may not understand exactly what a mortgage escrow is for. By definition, an escrow account is just an account that is managed by a third party. So when it comes to mortgages, a mortgage escrow account, it is just an account that is managed by the mortgage servicer in order to make sure that there's enough money to pay your taxes and your insurance when those bills come due at the end of the month. So the money is actually owned by the person that's making the monthly payment, by the buyer, by the client. However, the mortgage company is managing that money and making sure that taxes and insurances are distributed when those come due. The question I get a lot of times around this season is, why am I getting a check back? Or why did my monthly payment just go up when I've got a fixed interest rate loan? When that mortgage escrow account is too full, there's limits. It is regulated very, very tightly by the government. We can't have more than 1/6 of the total amount due for a buffer, which is basically 2 months. So I can have a 2-month buffer in that escrow account, but if I ever get more than that when that bill comes in, I've got to give you the overage. So if you get a check in the mail, that is because your taxes or your insurance came in lower than what was projected. This oftentimes happens the first year after getting a mortgage with your escrow set up. Sometimes your tax bill or your insurance bill can go up, and that means that your escrow account has a shortage. The good news is the mortgage company pays that bill. When that bill comes in, even if you don't have enough in that savings account, they pay it. But then they distribute the shortage over the next 12 months to make sure that, one, they're collecting enough for the new bill amount now, they're covering the extra that they paid for you immediately because you didn't have enough in that account. And also they're putting back in that 2-month buffer because mortgage companies like to keep about a 2-month buffer into that escrow account. This is why you might be getting a check back when it comes to taxes or insurances, the bill not matching what we're escrowing for. Lastly, when are they required? They are required typically when you don't have at least 20% down. Now, there are some loan types that doesn't matter how much money you put down, they require you have an escrow account just so that they can make sure that taxes and insurances are never delinquent. But a lot of loan products, if you have at least 20% down, they are optional at that point, but just know sometimes there's an extra fee on the front end if you choose not to have an escrow account. This is great knowledge for you to, one, have so that if you've got a client that has questions around escrow, you can be the guru. But secondly, go ahead and throw that wisdom out on social media. Give a little video, or if you want, remember in the toolkit, I do have a graphic already made about what are escrows, why do I get a check back in the mail, and when do I need escrows? We'll see you tomorrow.